Good evening, everybody, and welcome to another edition of Live Market Analysis. I'm your host, Carl Capolingua. It's a pleasure to be here with you chatting markets another time. The disclaimer before we get started is very important and mentions that everything we're going to discuss is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before taking any steps based upon that information, please consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of that info says that trading is risky. You could lose money. It's important to remember that everything you do, it's your decision, ultimately not me. So therefore, you're responsible. With that in mind, let's get your requests rolling. There should be a chat window somewhere there in your Google Meet platform where you can type in a code of any stock, index, commodity, crypto, anything. I can get a chart on from around the world. I'll give you my best analysis. Or it could be anything related to trading. So the methodology, the mindset, the money management. And I gave you some homework during the week to listen to those 8 chapters on YouTube of the Market Wizards. And really some of my favourites in there, like Paul Tudor Jones, Ed Sekoto, Richard Dennis, and many, many more. And hopefully you gain a lot of insight and information into what trading is really about. Not the stuff you see on Twitter or Facebook and all those horrible, horrible places, YouTube, other parts of YouTube for information, but what trading is really about. Let us head over to the AMI Broker screen. And we're going to kick off with our portfolio management model. And the last time we had a look at this, I said something along the lines of plus 1/3, and we would be moving towards a 2/3. I gave you a number. I said, let me get the right screen going on my end, 17,015. So I think that might have been last week's candle that we had to go on. Obviously, that says the 9th of August up here. We didn't have the 12th candle yet, which would have been the Monday. So that's what we had to go on. Market had obviously had a substantial correction and was trying to bag out a low in that long-term uptrend ribbon, as it has done in the past. A similar correction in terms of, sort of peaks and troughs and falling and black candles. Maybe this one was quite a bit sharper and shorter, but also terminating there or thereabouts. And we said on a move back towards 17,015, we could start moving towards 2/3. And then I gave you another level. If we could cross 17,792, we would be at 2/3 at that level. And then as we then progress towards full risk position, somewhere around 18,761. So history suggests that we have therefore begun the move from 1/3 risk to 2/3 risk at this stage. Let us have a look at the Aussie. Well, we'll do a little bit of a whip around the grounds, and we'll look at our other benchmark, or one that we've been using as a benchmark very recently, the Russell 2000. We noted last week it hadn't rallied anywhere near as well as the Nasdaq. That is still the case, I believe, which is a little bit disturbing in itself. This is the broader market, but nonetheless, we are progressing towards, if we said, look, last week we were at 1/3, this might well have been the 2/3 delimiter there as well. So I don't think that contradicts anything that we've said. And looking at the Aussie market again, is there something to I guess, dissuade us from moving towards a 2/3 portfolio risk model? And I don't think there is here. A very important move above the short-term trend ribbon, which in theory could have been a dynamic area of supply. It was for all of 1 and 2 candles upper shadows. We did see some supply manifest there, but Friday's big white candle blitzed that supply and showed us that we do actually have plenty of demand in the system. And therefore, I think this is coincident with what we saw in the Nasdaq and Russell. We are moving from a 1/3 portfolio risk to 2/3, and therefore getting some more cash to work. Is it frustrating? It's damn right maddening to think that these 2 days could have undone so much good work we were doing before that, only to have us just go straight back up again. That's markets, ladies and gentlemen. There's absolutely no point getting annoyed by it. It is just the market's going to do what the market's going to do. It's going to happen to you. Let's see if there's anything in the broader world of finance to push us off this theory, I don't think there is on the CAC, although we can see so much more damage done there and a fraction of the recovery. But looking at the DAX, it's probably more like the ones we have seen. Europe, stocks 50 somewhere between. The UK is fine. The UK is absolutely fine, and that is astonishing given, much like us, they have a big exposure to resources companies as well. We know resources struggling. Spain somewhere in between. So some damage has been retained there in some of those European markets. We can see the Hang Seng, well, that wasn't rallying into the correction we had elsewhere, so the fact it's going up is actually a good thing. That's a bonus. The Nikkei has recovered probably just over half, I would say, of its decline. It needs to do some work here at the long-term uptrend ribbon and turn that from what potentially could have been dynamic supply. It hasn't turned out to be the case, but hopefully dynamic demand and push back up. And then if we can get to sort of 39.40, you're going to say this thing's in the clear, which is absurd and annoying. All in one, the Nifty 50 over there in India didn't have any problems at all, really, and that looks very fine indeed. And as we said before, this is the perennial red flag, if you like, there in China, no pun intended, because obviously they do have a red flag, boom, boom. But the fact it didn't really go down in all of that madness and is actually heading back up means it's fine. It's no worse than it usually is. And we've obviously talked about Australia. Quick run through the sectors to see where you might want to favour putting some money. The discretionary sector, I think, looks very good. Energy sector, I think, still looks pretty awful. Financials looks excellent. And this is the carry trade, the fear of God being struck into the carry trade, and then completely people realising, well, we still have positive carry. The banks over here are still yielding, 5%, and we're still only getting 0.5% at most, on a two-year. The two-year Japanese bond. Don't quote me on that. It's thereabouts. Gold price obviously making a new high over the weekend. So that one is fine with me, but astonishing as well. Part of that carry trade blitz. And that's another technology one. Materials just looks awful. But what is wonderful about these charts, or the charts heading in different directions, is you're getting the ability here, ladies and gentlemen. It's rare that it happens where you've got a bunch of great looking stocks to go long and you've got a bunch of great looking stocks to go short, and that is the bonus that we have at the moment. REITs are fine, staples are fine, telecommunications are more than fine, utilities a little bit iffy, but let's call it fine. And that's all we probably need to see here. We're going to head over to that looks pretty bad. That is up to date. That's the US dollar index. Yes, 5th of the 8th. No, it's a little, 58 there, but that's 16th the 8th. It's up to date. Not all of these update automatically. Some of them I do manually. This one has. That looks like a great big short to me. But let's keep moving. Actually, while I'm here, let me do this. And we're going to do the base metals. I want to get to your requests. That's why I'm rushing this. Don't want to spend too long in this part of the discussion. Still very soft, still I think consistent with that material sector weakness. We have had a bit of a bounce in copper, but look at that long-term and short-term trend ribbon combination. You wouldn't believe it unless you saw it here, but you could just see 1, 2, 3 points now where it is now acting as dynamic supply. Quite incredible. Iron ore looks cactus. Nickel, slightly better than cactus. Lead is on the way to being cactus. Tin actually still half decent, and zinc not decent at all. We know beyond cactus, whatever is beyond cactus, is lithium, and nothing has changed there, or nothing looks like it's about to change. But then the flip side is that silver actually bouncing out of the long-term uptrend ribbon. That's very nice. And of course, the flip side, which is where I wanted to go, is gold. And that is the most wonderful, amazing chart. I know they're not candlesticks, but do you really need candlesticks to convince yourself that that is a wonderful looking chart? It is indeed. So that's where you want to be and where you don't want to be. Let's head quickly to the Amy Broker, the trading view screen. And we'll do a couple more. Bitcoin, neither here nor there. I'm not talking about Bitcoin anymore. I couldn't be bothered. I've given up on it completely. And we're going to go to, well, we talked about gold, but that's the That's the chart you're probably used to seeing in my evening wraps if you follow along there. High grade copper, another chart we do follow along very closely. Yeah, it looks kind of half decent. It is in the short-term downtrend ribbons, but some decent candles through here. I would love to see that pop through the ribbons, make a higher trough, do a little dink between 432 and 422, and maybe the copper story's back on again. And look, I don't want to see these things keep going down. I know some of you may be short it, so better stop talking. But the bull market is the easiest way to go for everybody. Iron ore actually trying to rally from that breakdown. Uranium still looks pretty awful, ladies and gentlemen. I can't see any upside impetus here. For me, it's just waiting to go down even further, and then the crude oil charts, plural, stuck in a range which is pretty consistent. We did see a little bit of a flutter there on thermal coal. I've been charting this and bringing this to attention again in the evening wraps, and I said we did actually get a little bit of a close above the long-term downtrend ribbon. That's the first close above the long-term downtrend ribbon since, let's keep going back here, really you have to go back to January 2023, so 18 months since we last saw this close above the long-term trend ribbon, and that's, I think, is important, and we've seen a little dink, a little hold above it. So watch this space on thermal coal. I don't think necessarily it's going to go on a rocket emoji run, but it appears to be turning the corner, and this one has turned the corner, but in all the wrong ways, because it is unfortunately linked to iron ore. So we're talking about coke and coal, metallurgical coal here. I want to finish with a quick look at the bond market, the all-important bond market, looking at Aussie bond yields. I don't know really if we want them to go up or down anymore. There was a time there we wanted them to go down because that would mean we weren't getting rate hikes, which is what the market really wanted. We might even get a rate cut or two. We don't want to see these crashing because it means the Australian economy is in the toilet or the global economy is in the toilet. But yeah, surprisingly, I guess, regardless of what's happening with our economy, our benchmark yields are tied to global yields, I think, to a large extent. And that's what we're seeing here. I'm not sure if that's telling us that our economy is going to be in the toilet. I think there's a mispricing there, to be honest, because I don't think the RBA is going to be anywhere near 3.6%. Well, 2 years is a long time, but not within the next 12 months, shall we say. Let us go to the Japanese twos. We're seeing here if these are heading back up. I'm trying to remember if that's good or bad again, because a few things have been turned on the head. If this was money flowing into bonds, panic buying of bonds, we are seeing the bonds coming off a little. Okay, so bond prices are coming down, which means yields are going up. I know you know that, which is facilitating the rally in the Nikkei, because there was a big switch out of equities into bonds, so that's okay too. But this is how complex things are at the moment, where even I have to remind myself which way is up. Doesn't happen often in economics. Usually we know which way's up, but as I said, we've talked about for the last few weeks this concept of the inflection point where things get inflected. And we are recovering here a little bit, which again is okay, because I guess if this is what caused the rout in equities, this is the opposite of the rout, so that's good. What we're seeing here is the market factoring out a recession, US recession. So we're not necessarily expecting interest rates are going to be high in the US. We're just saying they're not going to be as low as we feared they might be. Let us go now to your requests, and we'll start with the offline requests, and I'm going to go to Peter Mack, who's got Northern Star and gold companies. I think that's a great place to start, considering we've got the gold chart on screen. And we might do a little bit of a tour de ASX gold, starting with Northern Star, as he suggested. And I think that looks okay. You generally know what I think about all stocks because you've been following along with my ChartWatch ASX scans. I publish for you each morning via Market Index my favourite uptrends and downtrends. Obviously, if it's a feature chart, it's a very high conviction setup for me. If they're on that list, that big table, okay, and just use ChatGPT to rip that table into a TradingView watch list. Find the prompts. It's not that hard. Somebody in here might post it in the chat, and you can copy and paste it there. But have a look at all those charts, because if it makes the table, it's a plus 1/3 for me. Okay. If it's a feature chart, well, they're obviously the best 1/3 in my opinion. Now that doesn't mean they're going to be the best on any particular day. Usually they're okay, but you know, they're all fine. The downtrends, obviously, are stocks that I would subtract a third, whether that means selling if you've got it or taking a short trade if you're that way inclined. So my point there is that Northern Star hasn't been on those lists in recent memory. So it hasn't been popping itself up as a high quality setup, even though, to be fair, it does have a short-term uptrend. We can see it there, but it's a bit flat. It does have a long-term uptrend, but it's a bit flat. And the price action, if I really squinted, I could say it's, well, yes, it is higher peaks and higher troughs, isn't it? Because this last trough here, if we call this T0, and we call this T1, and we say this is P0 here, P standing for peak, of course, and this is P1, or it's in there, or maybe it's there, it doesn't really matter, but you know, it's going to be higher. So we do have decent price action there, but it's very overlappy, isn't it? It's not the clean price action that we prefer to see, which is where the last trough, so that is T0, is at or above the second from last peak. So if that again is P0 and that is P1, we like to see that T0 is above P1, and the reason for that is nothing goes up in a straight line. We're bound to have little pullbacks, little corrections where things get a little bit overheated. The money that's buying, the big accumulation money, the money's just soaking up on the demand side. They say it's a little bit hot. I don't have to buy for a day or two. Let's let the short-term traders just twist in the wind a little bit. All the chat room excitement and you know, kind of further froth. We might even sell a few. I mean, we've been buying all the way down here. We might even sell a few up there and just tip the balance tip the market into profit taking. Okay, where the hot money starts to get out, and that hot money is supplying into the market now. It was demanding, now it's supplying. And what do we want really in the long run? We want that supply, don't we? We got to a point where there wasn't a lot of supply around, so we'll just step back. Let's push some supply out. Okay, we might even get it started, and then when that supply comes out, we're going to be soaking that up. Okay, but we know that the old points of supply will tend to act as points of demand. We know that people that got out here, up here at P0, so if you got out at P1, at P0 you think that's a mistake, you want to eliminate that mistake by getting in as close to P1 as possible, as close to break even in your mind in terms of your exit, and the big fund managers start to buy in advance of that. So that's why we want that to happen. It's not happening here. This is a long story to really what should be a short story, to explain a short story, which is I'm not interested in Northern Star. I don't think it deserves my money ahead of some of the other ones we're going to see. Doesn't mean it's bad, because we've talked about some of the good things it has. I just don't think those things are as good as what we're going to see on some of the others. Let us keep moving then to Ramelius Resources, the second one that Peanut Mac has suggested. I think this one looks better. It seems to be making its mind up better. It's got a steeper long-term uptrend. It's got, a steeper price action short-term trend, certainly. It's pushed into a big point of supply up here, and it's done it quite well. I say quite well, not excellent, because we've got a few black candles, which is just manifesting the supply exactly where we expect to see it. So if I see it, black candles indicate supply always, but they indicate, I guess, harmless supply. I think that's pretty harmless supply, and then really, really nasty supply. We'll look at some nasty supply later on when we look at some shorts, because I do have somebody that's asked me about lithium and uranium stocks. Don't worry, we're going to see plenty of nasty supply tonight. That's, I think, pretty harmless supply up there. And what we're looking for here, many of you would know this now, that this technical term of the dink. Yes, we're expecting some supply there, and that's okay, because we want to see how the demand side responds. Is there a demand side still responding? And a really shallow pullback from what absolutely should be, almost must be, a supply zone, with some white candles, with some lower shadows. What does that look like? Well, a candle like that coming in here would be magic. A candle like that coming in there would be magic. And then if we saw that, that's when I'd be inclined to add a third to this. If I wasn't in it, I could take an initial third. If I was already in it for whatever reason, I could add a third. At this point in time, though, if I didn't have it, I'm probably a zero risk position, just waiting for all the stuff I've talked about. Let's go to WGX, which is one that has featured heavily in my ChartWatch scans. In fact, we talked about it not that long ago on this day here, where we said on a wonderful candle, isn't it? Plus 1/3, which is adding risk Full risk position if you've got it and you're not that way inclined to add more risk, but certainly hold on to what you've got. And nothing has swayed me since then. We have seen the manifestation of some natural, sensible, nothing to worry about supply. Why did it occur there? You all already just looked at it. You all just went, okay, that's because it's hit $3. And a few people who got in at 150 thought, oh, I've doubled my money, aren't I? Clever. And they sold some. But there weren't that many people selling. How do you know there weren't that many people selling? Well, because it didn't go down that much. And then it's gone straight back up again because it was just harmless supply and it's done a little bit of a dink. And we often see, levels like 3. Last week I said 3 is not that important. It's not that important. That's about that is the totality of the response I would expect to see at a 3. And we do find that if we have in the past seen a lot of price action around about 150, okay, we can expect there to be a little bit of a response at $3 because people are that stupid. Okay, I might have even been referring to you in a past life. That is before you met me. You did silly stuff like, oh, I'm doubling my money. I better get out now. Some people out there, not us, of course, they still think like that, and therefore we get market responses like we do. But otherwise, this looks fine to me. I wouldn't add a third based upon that last candle because it doesn't warrant it, but that doesn't mean this isn't a great trend. It is. Full risk position for me. Let me write that on the screen if you don't believe me. But probably not adding a third. Next white candle, next high close. I'm happy to do so. Let us keep moving to Newmont Mining, which has featured prominently in my ChartWatch scans, probably from around, I reckon that candle there, it might have even been a feature chart on that day, because if we go back, it was looking pretty darn good on that day. Let me go here and show you what I would have been seeing at the time. Like, perfect. That's a gap. It's not just, there's a little bit of a shadow on that colour. Okay, well, no big deal, because look, add the gap in. You need to add the gap into that candle, and it tells you that shadow is insignificant. It's broken out of a range. The trends are good. I know there's no long-term trend because it hasn't been around that long, but that's exactly where we want to start to participate or build risk. Got other opportunities through there. It did have a little bit of a pullback with the rest of the market panic, but otherwise it seems to be coming back from that pretty well. So no complaints from me. There's no candle at the end there to warrant me adding a third just at this stage, but full risk position for everything that we got. And next white candle, high close, adding a third quite happily on that one because it has the pedigree. Let's go to EMR, which is also quite frequently in the watch list there. This one I think you had some problems on, and I don't think you would have carried a whole full risk position to here after last time we looked at it, which is here. It looked great there, and it looked fantastic there even. But I think here this is a minus a third for me because we have made. Let's better draw in this price action. It's going to be orange. I don't think that matters so much, and we'll do a little bit more because I'm going to use it. So you can see here where the exits are. Black candle, eclipsing this white candle. I know they were probably the 2 down days on the Mars, probably down here, I'm not sure. Either way, whether they were bad days for the market or not, it doesn't really matter so much. I think minus a third there. I think 100% minus a third here, and almost really struggling to hang on to even to a third at that stage. Well, I guess, look, you could probably have given it a close beneath that, which it never did. So I think at most you're holding a third. Whether you would have added a third here, look, I'll leave that up to you. It's not a bad candle because we actually, we're moving back up. The price action is starting to look decent again. A little dink there at the trend ribbon. So actually not bad, and a strong candle here. So if you added a third there, leave that up to you. I'm not adding a third on this candle. It doesn't warrant it, upper shadow, but it's still fine. So I think you've got something like a third on this one and holding what you've got at this stage. And again, from here, because we are now, and this is very important, listen up, this is the important bit here, we are in a supply zone here, aren't we? We're in a major point of supply because this peak here is the highest point between a medium-term uptrend, higher peaks and higher troughs on this side, and lower peaks and lower troughs on this side. So that is a major point of supply. Therefore, it does deserve respect. And I think in terms of when we're adding risk to this next, we want to see a little dink. We want to see how the demand side responds at that supply zone, like we did with one a couple ago. And then the next dink with the white candle, I think, is we're adding some risk on this. RRL, he's given me I normally don't do this many for one person, but it's gold sector review. This one I'm not as interested in. It's not a long setup by any stretch of the imagination. In fact, I've had this in my short sell list frequently. I think from somewhere around here, if I'm not mistaken, or around here, I don't know. Definitely here. Go back and check on that day. It was definitely in there. Today's candle is decent. A decent volume, decent price action, but it's still early days. I wouldn't buy that, but it might be enough to knock me out of a third of my short position. That's probably the extent of it, but it is not an aggressive setup. It hasn't had a basing pattern. It's not back into high peaks and high troughs. It's not showing a short-term uptrend, so it's not even close to being an aggressive setup. It's certainly not a turnaround, and therefore there's nothing in it for me here. One that wasn't on your list, Peter, but did actually come up in my scan list today is RSG, which, not sure what we said last time. We might have had a third left. There you go. So we had a third left, and we're waiting for a close under here to exit the last third. It hasn't happened. It didn't happen. And this is actually a great case study to compare and contrast with the ones that we've seen, because we are moving back into that major point of supply, and we've done it so emphatically, right? We're not worried about that. Look, we could wait for a dink, but I think it's unnecessary given the strong showing of demand. We get that gap and the run and the high close. So I'd be happy to go plus 1/3 on this one today, or based upon today's candle, so sometime tomorrow. So plus 1/3 there, moving back into this one. And I'm trying to think if there were any other gold stocks. I know SPR, that still looks pretty good, not able to do anything on today's candle. I think it's interesting to ask the question, is this something that you would take a third off the table on that candle? Didn't quite get to 150. I mean, it's not at a really important place. Look, I don't think so. If you're really, really frightened, you could. But for me, no, I think I would stay FRP. I want to see confirmation of that. One candle does not a reversal make. So let me see confirmation before I do anything. I can't think of any other gold stocks because I don't care what these things do. You've got to really understand that about me. I don't care what they do. And they're just three-letter codes for me. If the chart's good, I'll buy them. If the chart's not good, I won't. So let's keep moving. A different Peter B has Audinate, which a few of you have asked for and confused. So again, just another one that has really been only a short for me from about here. And again, go check the tapes and go check the ChartWatch scans. Frequently run as a feature chart through there. Is this a candle here that's enough to knock out a third of your short side risk? It's quite bullish, probably not bullish enough. No, so I'm going to go no. I think here you're starting to take off the table. So plus a third, and I think plus a third here. And yeah, I don't know whether you want to stay short on this one, or at most you're minus a third on this one. Okay, so what does that mean for everybody that's asking? Oh, Audinate had a good day today. I don't care. I can't buy this. I have rules. It's not an aggressive setup. It hasn't done a basing pattern. It doesn't have short-term uptrend. It's not making high peaks and high troughs. That's not to say it can't go up. That's not to say it won't go up. I don't know the future. Maybe it will. But what I do know with absolute certainty is it doesn't meet my criteria, and therefore I don't care. So if you're looking at this and going, oh, Audinate's a good stock, and that's a narrative I've heard from people who appear to be more intelligent than I am, okay? And they tell me it's a good stock, and it appears to be really cheap at $11 compared to $24 where it was. And then that kind of equates to half price in my brain. And therefore, I really feel this overriding urge to buy some. Go, knock yourself out, do whatever makes you feel good. I cannot buy this because it doesn't meet my criteria, and I have rules. Let us go to LRV. Now, this one is more like the stuff I do like because we can see this is a turnaround setup. If Audinate did this sort of a thing where it started to show at least a short-term uptrend to break above its long-term downtrend ribbon, turn that long-term downtrend ribbon from supply into demand, start to print a few nice white candles on an increase in volume, then I could get interested in it. But that's how far away Audinate is from me being able to buy. And we might look back in 6 weeks and say, Carl, you should have bought it there. You're completely wrong to tell us not to buy it there. And I said, well, I can't tell the future. All I know is although I was certain of at the point, is that it doesn't meet my setup criteria. This one did. Hopefully you've done well out of it. I think you can look. That's a pretty big shadow there, isn't it? It's, for all intents and purposes, not far away from what is probably going to be a big point of supply. I think knock out a third, and that's all I'm talking here. I'm not talking any more than that. I think we're still holding 2/3 to see what else we might be able to get out of this. And you've got a little bit of play money really here, aren't you? Because you're in a decent profit, and we're just going to wait for confirmation. A big shadow or a big black candle, that would push me out of another third. I don't think you'll see those. I think you'll probably see small white candles just consolidating around here. Lower peaks, starting to get concerned. I think there's too much that needs to happen for me to even speculate where that next minus a third is coming from. Let me change that around, because I do not mean plus 1/3 there. I mean minus 1/3. On Larvotto, I should say, which I honestly have no idea what these guys do either. And I hope you made some money on it. Let's go LNW, which has featured in my watch list frequently, and I reckon as recently as here and here and here. These are all great plus 1/3 setups for me. Unfortunately, much like with Audinate going back up, we couldn't tell the future that we were going to have a little bit of volatility in the market, and it did knock the stuffing out of this trend a little bit. It's held up okay, but not as well as so many others have done. We're going to see a few of those tonight, and that is a little bit concerning. I think you can, if you're that way inclined, give it a bit more room, because it's not a total basket case yet. But if it starts to trade beneath here, I've got some problems with it. So let me say, because it's kind of cumulative. I mean, if you haven't done anything with it, you know, this big black candle and this one here is probably minus a third. And then that's going to be my look. I think you're at the very least minus 2/3 on a close beneath here. Okay, so let's go close beneath there, and you're at least 2/3 is my opinion. And you probably would even have, before you get there, you might even have another signal to get out before there to make this a full exit, but that's hypothetical, we'll see. Would I be adding risk to this? No, I can't add risk to this because I don't have the right candles at the end of it, and the trends aren't looking as strong as they should be, and the price action's not looking as strong as it should be as well. It's regrettable. I don't apologise, because there's no point. I can't know how nonsensical would it be for me to say something like, "Look, I apologise, it didn't work out as well as we thought." It's so silly and irrelevant, isn't it? It just didn't work out as well as we would have thought. But there are so many others that have come back fully and then some. Quite incredible. Now I'm going to look at just going in a chronological order of when they were asked offline. San, who's quite new to our webinars, he's asked for Paladin, which normally I get a little bit cranky with people who ask me about charts like this without saying this is what I'm looking at. Okay, so really, if you're going to ask about a chart like that, please do, but list for me at least 3 bullet points on why you want to buy it. So, for example, people who had Audinate, their only reason for wanting to buy it is it's been creeping up, it's had a good day today. But what about all the other stuff? What about the fact that you're about to smash into a potential great big chunk of excess supply at the short-term trend ribbon? And then you've got to deal with that one, and you don't, well, I guess to be fair, do we have high peaks and high troughs? I reckon we might have snuck it in. Certainly that's an uptrend. Certainly that's a downtrend. So, yeah, we've probably snuck back into high peaks and high troughs at least. Okay. But back to Paladin, I guess at least Audinate's got that. We're even less than that here. So if you're going to ask about something like this, I want you to make a case for it. And there can be no case made here. There's absolutely nothing. There's not a single redeeming feature in the price action, the candles, or the trends on this one to go long. And let me state that another way. If there's absolutely nothing going for it in terms of demand side control, in terms of wanting to own it, then there must be everything going for it to short it. And that's where I am with Paladin. It's probably an opportune time to go through the shortlist for tomorrow. okay, because we're going to see pretty much all of Sand's requests in here. So Sand's also requested Bannerman, which is one of my feature charts for a short tomorrow, along with Paladin, which he's requested. He's also requested Liontown, which is another feature chart for a short. And if I'm saying it's a feature chart for a short, that means there are no redeeming features in terms of demand side control. There is total and utter supply side control. And for me, all that means is there is a higher probability it will go down than it will go up. I don't know for sure because I can't tell the future, but it's just probabilities. Even if it's 51, 49, it's going down, that is good enough for me to not be the hell in it. And obviously better than 51, 49 to go short it. And I think that's where we are. No redeeming features on LTR. I didn't put LTM in the list, but it certainly was in my short list today. LTM. I probably should have put that in the feature chart. It's been in there many, many times. It just didn't have as strong a supply side candle today. That's why it didn't make it. And then Santa's also asked about Audinate. I think the only one that wasn't in there was PLS, and that one's still looking very sick as well. But of course, people might want to tell me, please do type in what great value these stocks all are collectively incredibly cheap and oversold as well, those old chestnuts. So Sand, welcome to the webinar crew. That's your initiation, and you always will get it straight up from me, mate. There'll be no sugarcoating, because why would I? Let us go to Adrian now, who's got VNT. While I was here, let me go through the short list. Ampol, it gives me just such a warm feeling of, just fulfillment inside to see this one crack today. One of my most featured downtrend charts in my list. And to see that big black candle just makes me feel wonderful. Not great if you're an Ampol shareholder, of course, but if you've been following those lists, you're pretty happy. We did talk about Bannerman, which I think is not far away from potentially doing something like that. We've talked about Boss Energy. It's just, just look at the trends. It doesn't even matter what I think. It's just what the market thinks here. And if these stocks were so good, could they possibly have charts like that? I put to you, it's impossible. If these stocks are as cheap as some narrative lovers, people who espouse narratives that they are telling you how cheap they are, I would put to you, it's impossible for the charts to look like that. That looks darn awful. That looks pretty darn awful. Fortescue, IGO, it's a list of who's who of absolute rubbish here. Mineral Resources, but Coal, Mineral Resources. It's got great management. Main Pharma, Nanosonics, NEC, NEU, Paladin, and VEA with a nice big black candle at the end. I don't know which of those will be lower in a day, a week, or a month's time, but I put to you there's a higher probability that they will be lower than higher. Stocks which I think have a higher probability of being higher in a week and a month's time than lower. That's the technology ETF there. CommBank. What was that all about? The carry trade unwound for 5 minutes, and obviously this is a big beneficiary of the carry trade, but the carry trade appears to be fine again. That's what that's telling you. We talked about this a little while ago for a turnaround play, and I poo-pooed it at the time, but you probably noticed not long after I did run it as a feature chart. Might have been on that candle there. I'd like that candle, and today I think it deserves a go. Might be a little bit slow and steady, but I think it's starting to turn the corner. And for all of those people who think I've been a bit nasty with those horrible downtrends, I'll be the first person to buy them. Make no mistake, I will be jumping at the chance to buy them when they are starting to show the fingerprints of excess demand returning to the system. And that would be a bunch of white candles. Okay, that would be short-term downtrends neutralising, turning into short-term uptrends. The price action coming in, bashing up against the long-term trend ribbon, getting above it, pulling back to it, holding it with white candles, price action coming back to higher peaks. And I trusted getting a little bit of steepness about it, and maybe even some volume events that are occurring in line with that. We don't need that one anymore. Okay, we are obviously at a bit of a point of supply here, but we hit it today, I think, with some energy, and I think that's important as well. Could be a bit slow and steady, but I feel it's worth a third here, and that's really all we're talking about. And that's how me buying into Paladin will start, with a third. Me buying into Liontown Resources. I just actually said those words in that order. Me buying into Liontown Resources. if it does those things, that's how it would start, plus a third. I think this is a plus 1/3. I think this is a plus 1/3. FRPs and plus 1/3. It's just looking a bit sketchy. I hope you don't mind. I want to delete all there, but we'll keep our history on it. NXL, big white candle. I love big white candles. Big volume burst after earnings. Love to buy those. Regis Resources, I think that's a big white candle there as well, moving into and showing us that major point of supply is not an issue. Resolute, we've talked about. Superloop, getting ready, I think, to push into 2 potentially. Santana, big white candle, another gold stock there. SVR, turnaround play, higher risk setup. You know, if you wanted to try 6 on this to start off with, I don't mind. I think it's worth a third based upon the fact that it's doing all of those things that none of those stocks we discussed before in downtrends are doing. It's hitting it, it's testing it, it's probing it, it's cracking it, it's holding it, it's pushing back above it. And then Westpac, of course, that one's pretty darn obvious. Let me round out your offline requests with 4 more. And we're going to go to VNT, which looks fantastic. No complaints there. Happy holder. FRP, no questions about it. And just needing next white candle. So next high close. NHC stands for next high close. All right, and that would be plus 1/3 for me. FRP stands for full risk position, which means if you've got it, we're holding every share we've got. Okay, and we're just thinking about where we're going to add some risk. Not adding risk because we just don't have enough of a white candle, enough of a inspiration to do so. Because we're going to find, like the 12 I just showed you then, there are stocks out there with big white candles that are demanding our attention, shaking us by the shoulders and say, hey, look at me, look at all the excess demand I have in my system. Woolworths for a potential turnaround play. It was a turnaround play for us not that long ago. You can see here white candle high close, plus 1/3, a few of them around there. And then on this day here, fatefully, before the market pullback, we had FRP plus 1/3. And I think here we went to 0 risk, which is frustrating because that was the exact point you didn't want to do that. It's literally turned around the next candle and gone straight back up. So my feeling on this is much like it was before it knocked us out. And that's going to happen, unfortunately. But it is moving back into high peaks and higher troughs again. It's holding the long-term uptrend ribbon. The candles are pretty good. I ran it today in the broader list. I didn't run it as a feature. I don't think it deserves to be a feature yet. There is going to be a bit of a supply zone up here, but I think it's good enough to put some risk back on it, as frustratingly as that might sound or feel to you, unfortunately. For some, but some probably didn't do a darn thing about it. And I'll leave that there. If that's you, then FRP. If it's not, if you did do something about it, plus 1/3. And CPU, that was for those two were for Adrian. This one's for Brendan, which is on my list of plus 1/3 today. Didn't make a feature just because of the proximity to $30 and a little bit of an upper shadow there. But it's I was really being pedantic in my feature list today because being Monday, I had to get the list done before I start my session with you. Otherwise, I'll be up to all hours of the evening getting it ready for tomorrow. So I did want to do fewer charts rather than more charts. And if I was had more time, I probably would have made that a feature. But absolutely, FRP for me, for you, Brendan. I think this is fantastic. And I happily going plus 1/3 here. If I didn't have it, I'd be looking to add, well, if I did have it, I'd be looking to add some risk anyway. Let's go to SHA, which is one I admit I haven't had in the watch list. We have looked at it here. You can see from our last discussion about it. And the reason why it hasn't been in the watch list is it just hasn't been making the liquidity filter. Okay, so I need a minimum, I think it is of 200 or 250,000, I can't remember, dollars on average over the last month. And if it doesn't get into the list because of the liquidity filter, doesn't mean it's bad. It just means it's not liquid enough. That's all. And you can still have the most wonderful trends on less liquid stocks. But if I'm putting a watch list in front of many hundreds of people, I do need a minimum amount of liquidity. I think this looks fantastic. I don't have to do much here, but copy and paste full risk position. I'm probably not going to add just on that upper shadow there. I know that's also being a bit pedantic, but I think just FRP for now, and then any little pullback, any next white candle high close, we can add a third on that. But certainly FRP, until then. Let me get to your online request now. Thank you for being so patient. Amber's got OPT, which is potentially now coming in for a turnaround play. So I don't mind discussing this one. It's certainly not a Paladin. It's certainly not a Liontown Resources. We are seeing the fingerprints of excess demand return to the system. In fact, probably the most impressive thing is all of these big volume events here. So we're definitely getting some interest. And each time we have one of these big volume events, even if it is on a, well, that's a bit of a nothing candle there, isn't it? I thought it might have aligned with that candle. I would have said, well, that's a great one to have it on. Let me see where some of these other ones are. Yeah, not bad. It's got a nice lower shadow there. Even if you get them on those days, look, at least we're dealing with the supply that has so obviously just been a weight, a burden on this one for so long. And the only way to get rid of that supply is to trade with them. They've got shares. They want their cash. So in their minds, they can go off and do something much better with that cash. They've got shares. We need to give them the cash to get them out. And that's what this volume is telling us, is that there is cash coming in. It is hitting supply, so that's okay too. We're getting rid of it. And that's good if we're seeing higher peaks and higher troughs. Okay, and we are. Decent candles. That's a decent candle. We're hitting the long-term trend ribbon, but I still think for me there's more that needs to be done here, Amber. So I know you'll watch this in the meantime. Let's see at least a dink, and then some really good candles coming in there. I'm not so sure I'm going to go for this one though. I just think there's a lot of work to do up here. I mean, if this is an area of demand in the past, right, we probably should draw it different colours. So if that's an area of demand, let me do this. You can't see what's going on here, but it'll change colour in a second. So if that's an area of demand, and we go 31, 5, do that, do this, do this, do this. Okay, so an area of historical demand is more than likely to act as an area of supply into the future. So even if we do get the dink, I'm not sure how much upside there's going to be until we've got some issues to deal with there. Okay, but we're probably even then looking too far into the future. This is a pass for me for now, but I think you know enough to keep watching it. GOR, I suspect we'll get a better result here. Not really. It's a little bit more like Northern Star than it is like RSG or WGX. It's not bad, but I don't think it's the best one out there. And it's, today's candle really tells you the story here. And upper shadows here, upper shadows, black candles. It's just, even when it's going up, it's somehow still going down. I think there's a bunch of latent supply in the system looking to sell this one on any chance they get, or any rally they get. And that's a bit disturbing for me. It's sketchy at best, even when you look back. And we say the leopard often doesn't change its spot. So it's not awful. I think if you've got it, you could hold it on the basis that gold's going up. To a large extent, all ships are going to be lifted by this tide. But I don't think this is the one I'd pick in gold. If you've got other gold stocks that you want me to look at, Amber, certainly type them in. Let's try and find the best of the best gold stocks tonight. Let's make that our mission. From Nicola saying, hi Carl, when you see a stock entering into a supply zone, do you take into account any upper shadows, wicks, or only use solid candles as a supply indicator? I hope this makes sense. It does, I think, and we kind of saw it on the last one. So I'll just go back to OPT, and where did I draw it from? Well, I don't know, that was instinctive there, but I can see sort of a few highs here. To be fair, this supply really is going to be all the way, it's going to be all the way up to there, isn't it? So that's really going to be the supply zone. Oh gosh, why is this not doing what I want it to do? There we go. But to answer your question, yes, I want to go to the highest high of the shadow, because that's the limit of the supply. Then I might look for other areas to line it up with, so other key highs there to line it up with. You've got two here, okay? Obviously we've got the two troughs there. But I think in this particular case, it's a little bit of a moot point, isn't it? Where, like, how big is the supply? We know the supply. If we're here, we know the supply is going to kick in not that far away. How much higher it goes, it's kind of irrelevant. Let's go back to GRR. It's as good as any, and we're drawing, say, where the supply might be. In this case, I'd be looking to take that little. Let me zoom in. So see that shadow high here, and that shadow high here, and I'd link those two up, and then I would. And you can do this in your trading view just as easily as I'm doing it here, and just extend that across. So that's how I would draw that one. It's a little bit subjective, I would put to you, but it's practice makes perfect. I'm trying to see where I might draw here. So this sort of there was a zone here. It's still probably part of the same zone that we're in. So connecting that and that. Other examples up here. I don't know. I'd probably go from here. I mean, it's where does it start? It's like, how long is a piece of string? There's $2 there. Look, let me draw lots of them today, and I'll explain them as I go, because they're a little bit subjective. Like I always say to you, this is not a black box system. It's a common sense system, and I feel that the more times I do something and explain it, hopefully it's easier for it to become more instinctive to you. But that's a good question. Let's focus on that today also. From Avant, hi Carl, can you look at JDO, which I think looks fine, but there's a supply zone there that I've drawn in the past. So let me take that across. We're obviously hitting this high here, okay? And then we might hit, can't do it now, I'm going to have to go up to here, but you'll see why. And then we'll extend that across. That one there is probably more important. And then we might line it up with, say, that top there, that peak there, and there's a couple of shadows there, maybe there, okay? I think that's probably the relevant zone of supply. And that's really all the analysis we need to do for this one, don't we? I mean, yes, there's a bit of a short-term uptrend, yes, there's a long-term uptrend, it's holding it well, but it's a little bit ho-hum on everything else. So, yeah, it's a pass for me. It comes up in my scan regularly, and yet you don't see it in my my watch list at all, do you? So I think that's, like we say, it's a common sense system. It takes a little bit of experience, and that's where my experience comes out in. I don't show you this. If I was just listing every stock that came up in the initial scan, there'd be 100 of them when there really need only be about 20 of them that I put in. This one gets filtered out, and it hasn't. I haven't regretted that every time I have. It's a pass for me. It's not the worst. It's certainly not the best, and that's why it's a pass for me. Let's go to CCP. There's nothing doing there. I don't need to talk about that one. Let's go to TUA. We've got some issues here, and the reason why we'll talk about this one is it was regularly in the list. Many times, and probably on that day there, probably on that day there, probably on that day there. I don't think it's gone in since then. It just hasn't had the candle, even on that one, hasn't had the candle. It's too close to $5 anyway. And from then, we have had a procession really, and that I reckon is going to be a little peak there, a little trough combination, and we're coming down through here. So I think if you had it, and again, when they come off the list, because they're turning around, it's up to you to do the work. And I think your first clear-cut exit signal came from the close beneath there. In fact, sorry, we had one earlier than that, so let's go back here, copy-paste. Okay, so I would say you would have gone, this is all past tense, of course, but I would say applying the systems I'd like to apply it, minus a third there, minus a third here. And I think if you're holding a third, you're extremely frustrated. This day might have even been minus 2/3, and probably a few of you are nodding your heads and probably saying, "Oh, I would have gone long before that, Carl." It's just all of those black candles, and yeah, enough for me. Maybe even these two together. Where I'm getting to this, I don't see a reason to have any position on this at this stage. That might change. I think I'm zero risk position here. So what does that mean to you? quite happily today, I would prefer to have no risk on this trade. What you do with that, that's up to you. What would get me back into this? I need to see a close above that short-term trend ribbon. I need to see a few days, I reckon, just turning that short-term trend ribbon into a short-term uptrend ribbon again, a little bit of a dink and a push up, depending on how good this candle is. That one there, that's where I could add another third. But let's see how it looks when it does. Let us go to Roscoe's got Brambles, which is looking quite good actually. So Brambles there was looking excellent. I mean, here looking excellent. If you got knocked out of a third here, I probably wouldn't have blamed you. Okay, that was obviously the market calamity. Now, it's going back up. It looks great. I mean, I'm very happy with this. It was in my broader list today. Didn't make a feature chart. Not far off it. It was Nicola. We're going to draw our red zone here. I like certainly those two. At most, you could probably go down here, and you can see what I'm picking. I'm picking these upper shadows. And if I was to do that, and I didn't do that on purpose because I know I'm going to hit this, but hitting that does help to tell us that there is supply from that price. I mean, it's pretty darn obvious. The good news is we're coming back into that now without too much fear. You can see there's not a lot of fear. There's a little bit of a shadow here in yesterday's candle. That is that supply manifesting itself again. But I think demand held up well, and to date held up pretty well. A quiet day overall in the market. If you're really conservative, I reckon you could wait for another nice day, another white candle, another high close into that zone, closing above this to add a third. I think that's a more conservative way of doing it. I don't think you need to. I reckon it's plus 1/3 here. Okay, I think it's good enough. Full risk position or plus 1/3, depending on what is most applicable to you. Let's go to a V-shape change. It was also what Roscoe's noting there, and that's crucial. That's important. Let's go back to LNW. Somebody asked me about that right at the start there. There's no V-shape recovery, is there? That's how you know this one has been left out. Fund managers are not chasing this one anymore, and that should concern you. Yet, you look at Brambles, this one's back in the basket. This one's back in the basket. I like to use that phrase. It's back in the basket of stocks that they're buying, they're actively seeking out. V-shaped recovery. Those stocks in the V-shaped recovery, they are in the basket. The ones that weren't so lucky, unfortunately, as an example, they if they're not in the basket now, what's going to all of a sudden get them back into the basket? You know what I mean? And this would frustrate me being on this one. I know that feeling all too well. And I empathise with you because you're watching this do nothing while the other ones are going. And to some extent, you've got to say, well, I can always get back into this. I'm happy to give it like it's 160. I'll buy it back at 165. All I'm giving up is $5, right? It's like an option. It's like I've got a $5 option on this. It cost me $5, but I'll punch some risk back in. But at least until that occurs, I can go and do whatever else I want with that capital. Let's go to FFM, which is also another solid recovery, but I'm guessing nothing to do with anything going on in the Nikkei or the carry trade. It's gold's gone up. It does mine some gold. It's also got some copper. Copper's rallied a little bit. But as you can see, there's a bit of history here. I've got some markings on this for some reason. I did run it today as a plus 1/3, Roscoe, so that's what I think about it. We are coming into a bit of a supply zone. I won't draw the red box, but needless to say, there's a red box between this dashed line and that dashed line there. But I think it's worth having some risk on it. And again, you're looking at that whole list and saying, well, you're ranking them. You might rank them from 1 to 5, and they're your 5 that you're going to do today. Not easy. I don't go that far for you, okay? But I do narrow it down to my feature charts, but I don't say take the 12 to a 3 or 4. That's not my job. That's your job. I can't do everything for you. I think I do enough. Let's go to De Grey. I can see what you're going for here with the turnaround play. Obviously, it's a gold stock as far as I know. It hasn't done all that well, though, recently. In fact, I think I had a few shorts on it starting from around here. I think you probably would have been out of those around here or here. Not a buy yet for me, Roscoe. I think it still needs a bit of cooking. Look, it would have to be a really decent white candle, because I think a bit like Golden Road, this one's got a pedigree for being a bit lousy and a bit sketchy. And even when it goes up, it somehow goes down, sort of thing, on a candle by candle basis. Let's go to AGL for Colin, which is looking very, very good. No complaints here. We do have a little bit of an elephant in the room, and that elephant is about that big. So we can see the top of that shadow and the top of this candle here, because that's where the gap sort of starts, right? So this is all supply. This is pure supply. That's what a gap is. It is pure supply. There's so much supply in that gap. The price didn't even trade there. That's how significant that zone is. So that is pure supply there. So if I was to draw this across, we're in it now. We're not too fussed about it, okay? I think we're pretty cool about it. But we're in that zone there. So whether I'm going to add another third here, let me see a dink. It's been a straight move up. Let me see how the demand side responds to the first manifestation of supply in that zone. Okay. To a large extent, where I'm drawing these boxes arbitrary. I'm sorry if that frustrates you. Okay. The point I would make is it doesn't matter so much, right? We know there's some supply up there. What matters, it's less about where exactly the supply is. The next bit's the important bit. It's more about how the price reacts to the supply, okay? How that supply manifests itself, or if it doesn't manifest itself. We want to know in our minds where it might be, but then we're looking at the price action to tell us how important it actually is. Let's go to Michael's got HCL, which HighCom came up a couple of days ago. I can't remember if I put it in. If I did put it in, it might have been on that day. But I do think that I assessed it. I don't think I put it in for the reason of this upper shadow here. Also, I think it's obviously one we've discussed in the past, because we do have a bit of a supply zone. I'm going to take that trough there, Nicola. I'm going to take that trough there. It's kind of the opposite when we're doing points of supply at old peaks. This one is this a point of demand, an old point of demand acting as a point of supply in the future. So here I would have been a little bit sceptical about it. I think the upper shadow and the proximity, I think, to that point of supply. I feel like we've done this recently because we've got some arrows here. If you did get in for whatever reason, I think we've got some issues. It's been a pretty straight road, pretty clear-cut supply side response since then. It needs to hold here. I'd like to see a lower shadow, a white candle, literally tomorrow. I think it needs to start tomorrow. I don't think it wants to go any further because we're at the bottom of this big demand side candle. And you've heard me say many times that that's where the demand started. If we're back to that level, that demand is gone. It's been fulfilled or it's run away. And neither of those things are good things. I couldn't be holding a full risk position here. I'd be less than that, 2/3, maybe a third at most. But look, it's got some stuff going for it. We've got a short-term uptrend. We're hoping that the long-term trend ribbon becomes dynamic support. And for those reasons, I think you can give it a little bit of leeway. But it's pressure time. It's crunch time right now. It needs to put up or shut up as soon as tomorrow, I feel. Let's go to PH2, which is a bit of a blast from the past. It is one that we certainly looked at, I feel, here. I would have run it as a plus 1/3. And here I still would have been happily holding. And then I think here was our species ending event. As we discussed clearly, species ending event, 0 risk position. So if you're asking me about it now, because there's no reason to buy it here, we do not have a short-term uptrend. We don't have a long-term uptrend. We don't have rising peaks and rising troughs, really. The candles are half decent, but we don't have a base pattern. There's no real volume to speak of. So I feel if you're asking me about it now, it's because you didn't follow those instructions before. And then I would put to you, there's no time like the present to start applying the appropriate amount of risk on this trade. And for me personally, it's still ZRP. If you wanted to keep some skin in the game because you're annoyed at the fact that you've lost money, and that's frustrating, I get it, I feel you, and you want to give yourself some chance of getting even on this thing, then maybe you could have a third, but that's not the way I do things, sorry. Let's go to, Michael's also got SXG, which is doing better. Southern Cross, okay, this one's ringing a bit of a bell. I don't think it's been in the list since, there or thereabouts. There's your certainly minus a third there, no doubt about it. Second, third, and I think you're all out. I think you're zero risk position, but we're potentially coming back into it right now. And if today's candle closed on the high, I would have been all over this one because I'd really like what I'm seeing here, here, and here. Those three arrows are doing what I've told you I wanted to see on so many that have come down. Okay, that's exactly what I want to see. The dink, the challenge of the ribbon, the comeback, the test, the hold, the nice candle, even the volume accumulation here. I wonder what happened today. I wonder why it couldn't hold those highs, because I tell you, if it did, it would have been almost the perfect turnaround set up there. So it's very good. It's very close. Let me see next high close. Equals plus 1/3 for me, okay, because all the other stuff is still there. Didn't quite fire today, doesn't mean it can't fire tomorrow. Let's go to who's got SBM. I've got another gold stock, which is starting to look good today. We've got a response there. I think it's still got a little bit of work to do. Decent volume though, look, decent volume. You can see there's so much other stuff that it's missing compared to some of the other ones. But it is tempting. It is tempting in that I think your downside's pretty limited. This is like, there's your there's your bailout point. If it gets back beneath there, you're bailing out. So you're getting in really close, I think, to the base. I'm going to go plus 1/3 on this Uzel. I think so. And it's a bit of a specky. It's a more aggressive entry, but I can't fault that last candle. I love big white candles. I love big white candles on volume, even better. And it has closed back above the long-term uptrend ribbon. It took out this point of supply here, and for all intents and purposes, it clearly doesn't care about that one there. So I think it's as an aggressive setup, and therefore you might want to do plus 1/6, but I think it warrants having a little bit of a nibble, bit of a toe in the water on SBM. Let's go to Perry. Perry's got TNE, which is just keeps on keeping on. Certainly made the shortlist today for plus 1/3. I didn't run it as a feature because I think I've run it as a feature about 20 million times. So I thought I'll give something else a go. Given today I wanted to keep the list very small, but otherwise it's a very simple copy and paste. I think you might have asked me about this one last time, Perry. So that's your FRP 1/3, and then it just goes, oh, that was supposed to be a copy and paste. Let's put that back down there. Why are you not copying and pasting? Let's try that again. There we go. So just, it just keeps on keeping on. That is the perfect chart. Zip also looking very, very good. You would have seen me run it as my feature chart on this day here. I reckon I might have even run it as a feature chart on that day there. Certainly got a third on that day. Today, obviously not adding a third because we've got that upper shadow. It doesn't require it. But next high close, I think you find you might even get a little bit of a dink here, and I feel that's kind of what it might need to do, just to get rid of a little bit of that hot money that's obviously in the system, and then it looks fine to keep going. You know what you need to say. I haven't done a lot of this today, have I? I haven't done a lot of watch out for the black candles, watch out for the lower peaks, but that's what you'll be doing if you've got these things. Let us go to, just checking the time, it's way over time for me to say this, but no more I won't do anything past Jackie's Yancoal. Let us pick up the pace then. Hi Carl, wondering if you could recommend any particular websites like Market Index to get news, evening wraps for the US. Love your evening wrap, would love to find something similar for the US. I don't know. I don't know, I'm sorry. Somebody else might be able to help you out there. Claire, they might be able to put your, type it in the thing there for us, and I'll call it out. I don't look at any evening wraps for the US because you know what I do when the first stuff and I do this every morning. I don't read wraps, Claire, but you know what I do. I start on my list. So Claire, I think what you need is a really good watch list. Now I can share my watch list. I've done this in the past. Let me go here. So these lists here. Okay, I'm pretty sure I can share them with you. And Claire, I reckon that's where you start. Obviously, you don't have my Amy broker list, but why not start here? And this is your watch list. Like you go through what could be in an evening wrap for the US that won't be in here, where you're looking at US twos. I've taught you what the charts mean, I hope, and and I'm telling you what I do. I look at my charts, and that gives me all the information, macroeconomic, microeconomic, everything I need to know about what happens. So that's one thing you could do. I won't do the research on how to do it. Somebody email me and say, hey, Carl, here's the instructions, okay? And I'll share my watch list with you as well, okay? And that way, you've got indices and bonds, as you can see through here, all the important ones. And then I've got my futures and Forex list, okay? And then I've got, what else have I got? Cryptocurrency. We don't want those, do we? So let me know on that, and I'll happily share those with you. Let us go to who's all WA1. Had a great bounce today. Very impressive. Very tempting, I think. It's the only thing that there's just so many black candles. There's just so many black candles. There's so much latent supply in the system, just waiting to sell this thing when it goes up. It's hard to want to buy those. And I saw this, don't worry, I saw that, and I saw that. I saw these. I think I might have put it in on that day, like reluctantly, like I can't leave it out any longer. It didn't make a feature, but I had to put it in for a third. I think one good thing you're not paying over 20, you're kind of getting it at 15. It's cheeky. It's at a plus 1/6. It's like your other one. It's like St. Barbara. It's cheeky, but change your screen. Thank you. Okay, there we go. We're talking about WA1 Resources. We're talking about how many black candles, even on the way up. I know there's maybe not as relevant through here and a bit through here, but look at all these black candles. Look at these black candles, and that concerns me because the leopard rarely changes its spots. So this one's from Hoozle. Hoozle asked me about St. Barbara as well. And that one I said, look, it's a bit sneaky, it's a bit cheeky, but I can see why you'd have a crack at it because you can see where your bailout point is. It's very close. I think this one's in the same boat. Whether it's a sixth or a third, happy to add some risk, but stay on your toes, okay? This is not for the amateurs here. This is for the pros because I want you to have the skills to get the hell out if we start to see those black candles come back in again. So if that's not you, then don't take the trade. A bit of a slow and boring stock, but MFG. Now, MFG is not that slow, not that boring anymore, Nicola. I think it's looking very good, actually. So it definitely made the list of plus 1/3 today. So let me go FRP if you've got it. Let me go plus 1/3 if you've got it, or if you don't have it. This is a good one for you because, look, here's the top of our thing there. And I reckon I'm going to go here. And then you see what I do. I just get the 2 points that I need, and then I just extend it across. Boom. And you can see that's, we've tested it here. We've had a decent test here. We had a test here. Look how many times we've probed into that zone of supply. And this time I think we're doing it the right way. Yes, it manifested itself on that day. This day we got through, and I think today's the day. Today's the key day. That we're seeing that lower shadow. We're reaching into that supply zone, and instead of it being supply, it's starting to become demand. And I think that's the key turning point for it. Looking back up after that, you've got to go back a ways until you get anything that's even remotely going to give you any trouble. So that's fine for me. There's nothing up there that I'm worried about. So it's a plus 1/3 today for me, Nicola. Very interesting chart. Glad you brought it up. Robert's got SUL, which I think is just staying the course on this. I've run this several times recently as a feature. Oh, is it a plus 1/3 today? Look, maybe not with that candle. Maybe you want it to do a little bit more. Look, I don't mind. Certainly FRP plus 1/3 if you're feeling it. But I think we've seen so many other things today. You'd struggle to make this the top of your shopping list for tomorrow. Okay, not that it's not any good. It's very good. Just not the best for the capital that we're looking to apply tomorrow. Let's go to QUB, which is another very good candidate. This one could well get you 1/3 for tomorrow. If I zoom out, you see it's all blue sky. Well, we're edging into 4. I don't think 4 is a big surprise for us this time around. I definitely ran this as a plus 1/3 today. I don't think it made the feature from memory, but we just did them. But more than happy with that one. More than happy with that one. Perry asking about LRS. A few people were very active. You all asked me about it through here and through here and through here. And go check the tapes. I'm pretty sure I called it. What did I call it? Pain trade. I said if you like pain, this is the one for you. And I don't think I was that far off. Obviously getting taken over. All script deal for Pilbara Minerals. Let's go to OBM, which is still looking fantastic. Obviously, there's no reason to do anything today. 50 cents is a round number. I think you just want to keep an eye on. It's a bit like $3, isn't it? That's $1, a big one, an important one. $2 is important. 3 is less important. I think 50 cents is less important. But we are seeing the manifestation of a bit of profit taking there. I'm betting probably around 25 cents. We spent a bit of time. Did we spend a bit of time around 25 cents? Lo and behold, yes, we did. So you're going to have some, what did I call them before? Stupid people who are selling at 50 cents for no other reason that they've doubled their money. I think this is fine. Obviously, I can't add risk to that one on that last candle, but certainly FOP based upon everything else we've seen. And thank you for bringing another gold stock to my attention there, Justin. Justin Evans writing some supply at 50 cents question mark. Yes, that's exactly what you're seeing, some supply. Not more than that. MMI did come up on my list today in the scan list. I didn't shortlist it for a third. I think it needs to do a little bit more. We've seen a few today that have done what I like to see. We want to see this sort of a move. We haven't seen it yet. When I see that, I'll put it back on the list for a third. I think it needs a bit more work. Robert. Who's will give me a couple more gold stocks. We've done, obviously, RSG. That made the shortlist today. CYL looks very good. Yes, this has been coming up very frequently on the list. I'm sure many of you own it for that reason. Today's candle doesn't warrant a plus 1/3. For obvious reasons, that upper shadow is keeping us out. But certainly, we're still FRP. If we're still FRP here, 100% holding every share we've got. There's no reason to sell a single share of CYL. Amber's got some more gold stocks here. CMM, probably the most frequently shortlisted and featured gold stock I put to you in my list. Therefore, I also assume many of you have it. Didn't do much today. A little bit disturbing, but I think the supply side response here is so mild. $6, one of those insignificant round numbers, but a round number nonetheless. And I think that's what we're seeing. We're seeing the manifestation of a little bit of profit taking at $6. My guess is if I zoom out far enough, I've probably got a bit of work done at 3, a little bit of work done at 3. You know, you're making 50% from 4. Look, I'm not fussed about that. I'm not worried about it. I'm certainly still FRP. And more than that, I reckon next high close, we'd go plus 1/3. Let us go to WGX. We've done. We were more positive on that one. Full risk position, obviously last candle, not warranting it. We've done CYL, OBM, and SPR. We've done all of those up to this point. Thank you. Perry's got some US stocks. We'll do those in just a second. Jackie's got YAL, which I'm pretty sure is the last thing that we're going to do. I think it's fine. The rest of coal is looking very ordinary. Okay, so this one came up in my short list today. My downtrends short list. So we've talked about some Barbara for like a cheeky long. What was the other one? WA1 for a cheeky long. I think this is a cheeky short here. I know that's blasphemy because so many people, for some reason, love this stock. But that looks like it's in a bit of trouble. That one's very sideways. SMR also. I think this one's more coking coal. I think that's in quite a bit of trouble. And then we get to Yancoal, which I have to say is the best of a lot of them. And some of you say, well, that's because it's the best quality coal. I don't know. I wouldn't have a clue. It's not important to me. I think we've got some issues here. Look, certainly beneath here and beneath here, these are key pressure points, and I'm almost minus 1/3 based upon this. Obviously, there's going to be a dividend in the not too distant future, so that's a capital event. We won't be treating that as a big black candle or a gap. Okay, so we just have to mentally add that back in. My AMI broker doesn't do it, and I'm too lazy to program that into it. I probably could if I really set my mind to it. Certainly on an actual close, not a dividend, ex-dividend close, minus 1/3 to keep us safe from being stuck in this as it does a Whitehaven or a New Hope or an SMR. Okay, my gut says first third out based upon today's candle. That's what my gut says, but that might not be a popular call. I'm pretty close. I'm guessing you guys are too. Reuters morning bid. Thank you, Matthew. So for Claire, seek out the Reuters morning bid. It's a quick around the grounds. What is my usual morning routine? Asks Hoozle. it's exactly that. Start with the charts. I start with the charts all over the world, much like I do with you for the first 10 minutes here, that whip around the grounds. For me, that sets up my day. It tells me exactly where I need to go looking for themes, whether it's like gold has done well, or oil has done well, or uranium hasn't done well, or iron ore's tanked, or bond yields have rallied, and stocks have come down. I'm looking there. I'm looking at my portfolio management tool. I want to know if I'm adding risk today or not. I might not even be adding risk today. That's the whole point. So I have to start there because it then frames everything else I do. Obviously, if we've got trades to set up, we set those up when the market opens. There might be things that need to be, things that we're getting into. We're monitoring those, not so much to watch them, but just acknowledge that we've got trades we've got new risk. And then it's just obviously doing the work that I have a day job. They pay me to write articles on Market Index, and that takes up most of the rest of the day, and tweeting about lithium for some reason. I find that quite interesting. When lithium probably goes back up, I'll find it less interesting. Matthew asking, with a focus on macro and US like Carl does, okay, so like around the grounds, it comes out around 10 a.m. every trading day or a couple of hours before 11:30 p.m. I'm guessing that's Sydney time. Quick 5-minute read and refresher. No TA, but we're going to, Matthew says, that's what the webinars are for. And we've got some US stocks. Okay, let's head over to the US ones, whip through these, and we'll get out of here fairly shortly. FTAI, which is not there. It's over here. FTAI. I know this is one we've done a few times now. I'm hoping it's still going well. It is. We had, oh gosh, what do we have here? A close beneath here. Well, see, here's the thing. I mean, a close beneath that candle, minus 1/3. I don't think you would have enacted that on that day. I mean, that's a very strong candle, so I think you would have given it another day by that close, and then it's been fine. So I think you're still okay. I think you're still FRP on this one. That candle is good too. So I think plus 1/3. Plus 1/3. FRP plus 1/3. Yeah, I know we were FRP here. I'm not sure where we looked at it last. So maybe we must have had that candle because I drew the low beneath it. So maybe we only had that candle. 2nd of August, which makes sense. So that's a Monday. So we looked at it 2 weeks ago today, and we only had that candle. I said if it closed beneath there, minus 1/3. I've got a thumbs up from Matthew, so that is what I said. And hopefully Matthew looked at that candle and go, well, I don't really need to do anything because you need to see the close beneath. So you're looking at the end of the candle and you go, not much to do there. And then it's kind of done the right thing since then. Today, you're actually back to a plus 1/3 because it's not showing any concern about that high there. So I think that's good enough to click save on that and keep going. I do have a couple offline. I forgot Craig's last week. He got very cranky with me in VDA, so I better not forget it this week in VDA. Last time we looked at this, probably for Craig, we were looking at it for a short. So it's regretful that I didn't look at it last week, because if we look at it on the 9th candle, I probably wouldn't have been much use to you anyway, Craig, because on that candle, I think I would have said, this is a problem. That's a big candle in the demand zone. And then you've got that candle there confirming it. I probably would have said, look, a close above here is at least the third, and on the strength of this and the strength of this, probably 2/3. And then I think your last bet is probably this candle here. So I think you're all out on your short. If you're not, that's the message, all out on shorts. As for taking longs again, let me get rid of all this stuff, because we just don't need them. It's a little bit like SBM. I can see it. I can see this is so strong. I mean, we're looking at a chart of the Nasdaq here. This is so strong. This low is higher than that low. It's exactly where you want it to be. And then we've got some really strong candles, and we're not seeing a great deal of fear about these major points of supply. I could add a third here. I could have some risk on this. It's just skin in the game. It's no more than a third, just to see what's going on here. We know NVIDIA, when it's good, it's very good. There's still so many questions that need to be answered up here, and therefore, for that reason, it's no more than a third. That's it. Let's go to Dell, which is the other one here for Craig. Yeah, well, maybe he's short this one as well. I don't know. I assume so. I think we're not holding a full risk position on the short side. But I think you can keep some skin in the game. The bug out point would be there, sort of a close above, say, 118.40. I think this trade has run its course on the short side. Obviously, it's too early to go long. We would need to see a close above the trend ribbons. We need to see a pullback, some decent candles, and then we could entertain it. But that is so far into the future, I don't think we need to talk about it right now. So I think maybe Craig asking about those on the basis of shorts. Perry's got a couple for us in the USA. Let's do FI, which is Fiserv. Wonderful chart. I'm just going to check out the weekly to see if there's anything out the corner there of our eye that might be causing us some concern. It's not the case. It's all very good. There's nothing like it's nowhere near $200. It's come back. It's held the short-term trend ribbon really well. In terms of price action, I don't think we've got high peaks and high troughs through here. This was a stock market calamity, so I could forgive the fact that the price action isn't perfect. The candles and the move since then more than makes up for it. And if not for that calamity, I'm sure it would have done very well. So let's go FRP plus 1/3 on this. There's really not a single reason in the world not to have risk on this stock. So let's get some on, and then we'll go to USFD. USFD. Keep doing that. USFD. Very good. I like this base pattern. So it's a break to the top of that base pattern. Look, you might want to wait for a little bit of a dink back, but I don't think that's necessary. I don't think it's showing any fear at all at these levels. It's all, I shouldn't say it's blue sky, because I can't see what's happening beyond that, because that's not relevant for me, because the market has a memory, but only up to a certain point. There's absolutely nothing here. I'm looking, I can't see anything that would push me off going FRP plus 1/3 on this one. Also, very much wanting to get some skin in the game, some risk on the table on that one. And Perry's last one is CDNA, which is CDNA? Yeah, CDNA, which is CareDX. Amazing. Let's check out the history on it. We do have a little bit of a history here. It is a turnaround play. Look, 41. It's just a regular peak on the way down. There's a little bit more here. 46 to 48. It's 41 and some change, was it? Let me just double check. Yeah, it's more like 41.50 and then 46 and upwards. Let's see how that looks back on the daily now. 40, 41? 41's miles away. 41.50. Forget about it. That's fine. Okay. FRP plus 1/3. This is the best of them because it's the biggest white candle there on huge volume. If I very much wanted to get some risk on the other ones, I very, very much want to get some risk on this one as well. So 3 or 4 that you gave me there, Perry. 3 very, very good setups. And that's not doing what I want it to do, so I have to do that. And that does take us to the end of tonight's session. Matthew's saying NVIDIA has an earnings call in 10 days, which that's going to be a big move one way or the other, I suggest. Let me head back to the PowerPoint presentation and remind you that everything we've discussed tonight is general in nature, has not taken into account the personal financial circumstances, objectives or particular needs. So before acting upon any of that information, consider it carefully, seek the help of a financial professional to determine its appropriateness to you. Trading and investing is risky. You could lose money. Markets go up, markets go down. It's important to remember that it is you who's responsible for the stuff you do and not me. Apart from that, of course, it has been a pleasure chatting with you this evening. There we are, back in the studio apartment here. And turning on the nighttime window. As they say in the classics, keep calm and follow the trend until we catch up next time. Until then, all the best if you're trading. Bye-bye for now.